You can win more than half your trades on pocket option and still lose money. That sounds impossible, but it's not. The problem isn't necessarily your strategy, it's the math. Say you put $100 on a trade. The payout is 80%. You win, you make $80. You lose the full 100. Win once, lose once. You're down $20. So 50% accuracy isn't enough. You need to win more than 55% of your trades just to break even. Not to get rich, not to beat the market, just to get back to zero. And this is where binary options get interesting. Because you're not simply predicting where the market will go, you're predicting where it will be when a timer expires. On platforms like Pocket Option, expiry periods can be extremely short, sometimes around 60 seconds. Get it right, you get the predetermined payout. Get it wrong, you can lose the amount you risked. Now imagine repeating that every few minutes. Win, lose, win, lose. Another prediction, another timer, another result. That speed matters, because rapid, repeated wins and losses can create a reinforcement pattern similar to what we see in gambling. After a loss, the temptation isn't always to stop. It's to try again. Maybe with the same amount, maybe with more, maybe just enough to recover the last loss. And that's when the goal can quietly change, from analysis to recovery. But here's the part that makes this bigger than one platform. Regulators have been warning about binary options for years. The UK's Financial Conduct Authority permanently banned firms from selling, marketing, or distributing binary options to retail consumers from April 2019. The FCA described them as fixed odds betting products and warned about the significant risk of losing money. Australia took similar action. ASIC banned the issue and distribution of binary options to retail clients in 2021 and later extended that ban until October 1, 2031. ASIC pointed to characteristics including all-or-nothing payoffs, very short contract durations, and negative expected returns. It also found that around 80% of retail clients had lost money trading binary options. That doesn't mean every trader loses, and it doesn't prove every platform is a scam. That's not the argument. The argument is the structure. You risk money, you predict an uncertain outcome. There's a fixed deadline, and the payout is determined before you know whether you're right. That's why calling it trading doesn't automatically make it behave like traditional trading. The chart makes it look like analysis. The timer makes it feel like skill. The payout makes it feel like opportunity. But underneath all of that is mathematics. And mathematics doesn't care what the app calls the button. If your payout is 80%, 50% accuracy loses money. Even 92% requires more than 52% accuracy just to break even. So here's the real exposé. The danger isn't simply that you might be bad at predicting the market. It's that a short-term wager can look, feel, and sound like trading. And once you start treating every few minutes as another opportunity, more trades don't necessarily give you a better edge. They can simply give you more opportunities to repeat the same mathematical disadvantage. So, is binary trading gambling? My answer is clear. Binary options have a structure much closer to a fixed-time wager than to traditional trading. Not because the screen looks like a casino, because of what happens underneath it. The chart doesn't change the mathematics, and calling a wager a trade doesn't make it one. If you've ever chased a loss with another trade instead of walking away, That wasn't necessarily a strategy problem. It may have been a psychology problem. And that's what this channel exists to break down. Subscribe if you'd rather understand your own brain before the market uses it against you.